Welcome everyone to today's Title Topics webinar. This is Alta's free 30-minute presentation we've been offering as we strive to provide alternative ways of communicating important industry information to our members. I'm Jeremy Yowie, our Director of Communications, and joining me for today's webinar is Brent Scheer. He is Chief Financial Officer for Agents National Title Insurance Company, and he will be discussing the importance of three-way reconciliation, keys to a proper review process, and what to look for once you've completed the reports. Brent, thanks for joining us and taking some time out of your busy schedule.
Hey, thanks, and great to be here.
Just before starting, I just wanted to go over a few housekeeping items. If at any time you have a question, please use the chat box in the lower right-hand corner of your screen, and we will hold some time at the end to address any questions. And as an added benefit, if there's anything you missed in the presentation, it will be available for download at alta.org/title topics. Again, that is alta.org/title topics. So with that, I'll turn it over to Brent.
All right, guys, very exciting topic today, and certainly something to where hopefully you guys get something out of it. I like to talk about it, and it's critically important essentially to the industry, especially with some of the things that can go horribly wrong with the escrow account. So without much further ado, let's get started. We've got a poll for you guys to take, so we're going to make sure you guys are awake right off the bat. First thing I'm going to do is send you a poll. All you need to do is answer yes or no in terms of how many of you actually prepare escrow reconciliation. Good. Keep going. Almost there. And we're going to kill that poll now and share the results. It looks like we've got 7 of you there. Hopefully you guys can see that now. Looks like 5 of you do not prepare the recon, 2 of you do. And let's go to our next one, which is how many of you review the reconciliation? Again, just a yes or no answer. 1, 2 of you review, 4 review, good. And let's see, 5 of you, so 6 now, just a couple more. 7, I will end that, looks like. So most of you are reviewers then. That's good. And finally, the last one is, how many of you guys have found errors either in personal or business bank accounts that your bank made? So this means your bank messed something up in your personal account or your business account. Looks like 4 of you, yes. A couple of you, no. Still a couple left to vote. Quick story on that. I used to work in a large bank, and they had an accounting department, much like any other company's accounting department, except obviously in a bank, they are responsible for accounting for all of the checking accounts. And my job as an internal auditor was to validate that they were doing their reconciliation of the DDA accounts, which is your checking accounts, to their master account. You know, for a bank, the money you put in there is basically a liability to them. It's money they owe to the customer. They had not reconciled that account in 6 months. It was millions off. And we're talking millions. Just imagine walking into your escrow accounting department or an agent's escrow accounting department and they'd be off millions of dollars. You know, it's like a heart attack moment. And for me, I mean, I just looked at the guy that was in charge of doing it, and I said, basically, how do you sleep at night, for the love of God, you know? And he said, listen, we figure that all of our customers reconcile their bank accounts, and if there's a problem, they're going to tell us. And so from that moment on, I said, oh my gosh, I got to reconcile my bank account. So I tell that story to everybody, especially in this industry. You know, banks aren't perfect. They're going to make mistakes. So let's move into now our deal. We just answered those. So most of you guys are reviewing, and it was 4-3 as far as bank errors. So they happen. here's how I look at the real estate transaction from a risk assessment standpoint, going back to auditor training and what I did. You would want to look at who's the highest paid party of the transaction. Well, you know, we can all say, no, not the title industry, right? It's probably going to be like your realtor, maybe an attorney, or the bank getting interest, you know, but it's definitely not us. Who's the lowest paid party of the transaction? Well, that's unfortunately where we're going to come in most of these cases. Of course, they all depend on the state you're in, but in general, we don't get paid much, and it's a one-time fee. And finally, who handles all the money? Well, it's us in most cases. Granted, each state's different, but in a lot of states, the title settlement office is going to be closing the deal. And when you look at it from that perspective, it's a lot like a bank teller. You know, so what is the bank teller? Well, they're usually, you know, some of the lowest paid people in the bank, but they're handling all the upfront money. So how do they handle it? Well, they reconcile every time they walk away from their drawer. They're going to reconcile at the end of the day, and then they got to fill out the report, and then a manager signs off on it, and they turn it in. And if they're off, you know, they've got to explain it. And if they're off a lot, they might get fired. So with that kind of approach is really how I look at our escrow industry and what kind of steps we need to be taking. In my opinion, the three ways the most effective way to mitigate the risk of embezzlement, fraud, book errors, and bank errors. It's also a way to identify the external fraud, which is becoming more and more of a problem. The only way to prove the book bank agreed to each file is to that has been properly received and dispersed. You know, the procedures basically should be set up in a way that you segregate the duties. You know, just deposits, disbursements, reconciliation, review are all separated. Now, smaller offices don't have that ability, so they've got to be creative, and there's ways to do it. Something you can email me afterwards, and I've got a couple things that can help you out. But maybe most important as well is the timely review of the reconciliations, including wire activity and file activity. You know, those are where you're going to find problems, and then the most important thing is to fix them. What do you do afterwards? The action item. The keys to a good review: utilize a written step-by-step process. Always ask questions of preparer and closers. Pull at least one file to double-check. And you want to make sure procedures are being followed in that file. And always sign a date to indicate the review was done. That's critical because always think of someone else looking over your shoulder. How are they going to know you looked at it unless you leave a trail to be able to verify it? The bank account. The escrow bank account must be labeled either escrow account or trust account. Attorneys have their own lingo there in terms of their IOLTA accounts. But at the end of the day, what that really does is allows the FDIC to give additional coverage to the account, so it knows that there's additional money within the account that is eligible for more coverage. And it's $250,000 up to each agent file balance. And it also is kind of a side note, puts the bank on notice that these are escrow funds, these are trust funds, these aren't company funds. You wouldn't expect an ATM card, for example. The packet that you want to create each month, even for the people that are preparing, and the person that's reviewing, you would expect to see a few things. The three-way report, which shows you bank, book, and trial balance. You'd want to look at the trial balance, any deposits in transit, any outstanding checks, and then kind of the cleared activity and then the prior month's packet to compare to. The three-way report, you want to verify the beginning and ending book and bank balances to the last month's report. You want to make sure they tie from the ending bank balance of the prior month to the beginning bank balance of this month. Same for the book balances. You'd be surprised, sometimes they don't, and that a lot of times could be a fraud situation or could be a bank error situation, even a book error situation. You want to verify the beginning and ending bank balances as shown in the three-way report. The trial balance reports, make sure they flow to the three-way report, and then your outstanding checks and deposits to the three-way report. So again, you're taking that main three-way report and agreeing it to the sub-reports behind it. Again, these are things that often I find aren't done, and this is a huge step, and it's very easy, but it needs to be done to make sure that you can, that you know you're working with a complete set of records. Bonus is just being able to verify the cleared activity. The bank statements are really tricky, so sometimes that's not an easy task. Escrow trial balance. You want to scan the file balances for negative files and take corrective action if found. Negative file means the person over-dispersed on the file. They got $100,000 in, they dispersed $200,000. That's not good. So you want to make sure you're on top of that. You want to make sure that you have all of the funds that have been taken in should be zero, so dollar in, dollar out. Review file balances for reasonableness. So if you've got Farmer Joe and Farmer Bill are trying to come together on a closing date and there's a large earnest money deposit in your escrow account, you're aware that it's there and you know that Farmer Bill just hasn't quite come to a closing date yet and the contract still allows for that. So that's a reasonable balance. Now, a quick one here. If you find Brent's Ferrari fund in your trial balance that you're reviewing, please call me. I've been looking for that for a long time. I would love to find that file, or Brent's boat fund, either one. Kind of my little joke here, so everyone can laugh if they wish. Scan the file numbers. Make sure you got unusual file numbers such as miscellaneous, unknown, etc. True story, I actually found one trial balance that had payroll on it. That is not good. You don't want payroll in your trial balance. That's commingling of funds. So that one obviously didn't go well. Deposits in transit are the same thing really as a negative file balance. Deposits in transit mean you show in your books that it was received. However, the bank never got it. As you can imagine, that's a problem. Anything over 2 or 3 days old is a big problem. I call those one of your you're on fire, stop, drop, and roll moments. So in that particular case, these are just as dangerous as a negative file balance, meaning that you thought you received $100,000 in, you dispersed $100,000 when in fact the bank never got the $100,000. So in those particular cases, you want to be all over it, calling the bank, calling the customer, figure out what happened. Just a little story on those two. The quicker you get on top of these, the better chance you have of recovery, i.e. the customer honestly made a mistake or the client honestly made a mistake or the bank, God forbid, didn't wire the money in properly. The quicker you're on top of these, the better. If they sit, then your chances of recovery go down with every day that it sits. And, of course, follow up on deposits from last month to the month you're in. You know, it's not uncommon to have deposits in transit at the end of the month. You know, you go from one bank statement to the next. The key is that you just verify that they cleared that next day, which will be the first of the next month. Outstanding checks, you want to look for this to make sure that nothing out there is old, real old, stale checks, as we call them, and investigate the reason why. The other thing in our business we need to be careful of is taxing authorities, i.e. the local collector, the local assessor, mortgage companies, insurance companies, any vendor that I could say, if they're not taken care of, could grow up to be a title claim. You know, obviously everyone knows if the taxes aren't paid, then it will be sold on the courthouse steps. Stale checks, though, after a certain period of time, and you'll have to check your state statutes, usually require that you turn over those as unclaimed funds to your state treasurer. So it's very, very important to note that you cannot take those monies and put them into your operating account. They need to be turned over, and unfortunately I've seen that too. Cleared deposits and checks, basically you're just scanning for unusual activity. You know, as part of one of the reviews I was doing, I found a Pizza Hut transaction in an escrow account. Amazingly, it was valid. So, you know, that kind of stuff, you just want to be aware it's out there so you got no surprises. Tips for escrow accounting. Really, the only type of miscellaneous type accounts that I see, and we're talking the client trust account. Normally, these are numeric, you know, 12-0111B or something. I believe the only one you want to have that are valid would be any interest income if you're allowed to do so, bank charges that are happening through the escrow account, and then seed money, and that's where you've put money in from the operating account into the escrow account just to make sure that there's some buffer there to cover any bank charges or wire charges. My experience has been suspicious activity involves these miscellaneous type accounts. Again, that payroll, you know, there's no need for a payroll client account, for example. Interest received bank charges, if any, should be settled monthly and transferred to the operating company operating account or transferred into the escrow account, either way, whatever is appropriate. So you want to do that on a regular basis. You don't want to have excess funds sitting in your escrow account. and at the same time you don't want any negative file balances from bank charges building. You want to settle those out monthly. More tips, positive pay. Positive pay is where your bank receives a listing from you that is basically, it shows all of the checks that were issued for the day. They can then use that listing to compare to the checks that are actually coming into the bank account to be cleared, and they compare them. The more sophisticated bank, the better the comparison. And you're looking for, they look for literally the date, the payee, the dollar amount. They can even get so sophisticated as to verify even signatures and some other various things. But this is a huge advance in terms of being able to prevent check fraud, which is still one of the leading types of fraud. Wire fraud is becoming more and more apparent, and the electronic transfer of funds is exposing a whole new window of opportunity for criminals. But positive pay is a wonderful step forward to ensure that only people that are allowed to do checks in your escrow account, the bank knows to let them clear. And you basically just, the bank would allow you to submit this listing. They would call you, or they have emails where the next morning you can verify what checks should clear if they have any exceptions. You have the ability to allow a questionable check to come through if it's valid. But at the end of the day, someone in your office is appointed to talk to the bank about any exception items. And they happen. You know, a bank presents a check from another member bank, and it, you know, the wording's a little weird, or they can't quite read it well. Those things happen, so you just need to be careful and make sure that you have that person appointed. But it's just a wonderful tool. I've heard of some banks who won't even open an escrow account without requiring the positive pay element of it. It's becoming that big of a deal. And frankly, when you listen to industry participants, and even on the payroll trust side and those kind of things, check fraud is just it's a mess, and it's something that we all need to be aware of. The reconciliation using BIF files, BIF is basically just kind of like XLS or PDF. It's a type of file that a bank can recognize, and again, you might need a more sophisticated bank to do this. But your software provider can download this activity from your bank, and then basically it has a function where it auto-reconciles within your software. This allows you to work only the exceptions, so everything else that clears is done. This can save you potentially hours, depending on how much volume you have. Granted, I know we all wish we had more volume these days, but the volume that you have, this can tremendously speed up your reconciliation process while still having a wonderful process in place to make sure you're catching the stuff that needs to be caught and then identifying the stuff that needs to be worked on. This also facilitates a daily reconciliation. More and more, the daily reconciliation now is the best practice. Monthly doesn't cut it anymore. I've seen some title agents kind of go to a weekly process to kind of bridge the gap. But when you take a reconciliation using the BIF files with a software provider and a bank that can work with you, this is a wonderful opportunity for you to be on top of the best practice and make sure that, God forbid, if something happens, you're going to be able to quickly identify it and get on top of it. The worst thing we've seen happen was a criminal element out of Nigeria was able to jump into an escrow account, take $440,000. They caught it. The agent caught it the next morning. Had literally the Fed officials in their office that morning by 10 a.m. But it was already too late. They had cleared it through the Bank of New York, Fed, and into some country, non-extradition country, and it was gone. So sadly, these things happen, and frankly, they're pretty effective, which isn't good. And the other thing is Rhino. There's third-party software out there like Rhino. Rhino is the one that we've worked with in the past that works with your software program to allow you to work with some of these items and facilitate daily reports that are absolutely fantastic. Prevention in online banking. Like I said, online banking is something that everyone kind of takes for granted these days, but the risks involved are substantial. Prevention, you want to disable all international wires. You know, some people may have a reason to have international wires available, but I'm going to tell you right now, the risks involved with international wiring and allowing that to happen with your bank are significant. So you need to basically, what I've told people is disable all international wires, and then if you have one that's legitimate, just walk down to the bank officer and do it there. That way they take on all the risk. Dual controls are absolutely required. You have to have one person who can do the initiation and one person release. Never can any one person do both. And then further, actually follow the practice. Certainly banks have those setups, but then some people kind of cheat and allow people to do both. That's where you run into big, big problems. And then the best case, again, is dedicated computer for wire activity only, meaning really no email. The only internet connection is to the bank, and that's it. You know, given the cheap desktops that are out there, this is certainly possible, but then the actual making sure that no one gets on there to even do a Google search is critical, because that's how you download some of these Trojan horse or Zeusbot viruses. Your bank can send you text messages, confirm, review all bank wire agreements to know exactly what your exposure is. And then finally, you also have some things such as Iron Key that encrypt the data for you. Mitigation. If you have multiple office locations, it's absolutely critical you have a fidelity bond. I would consider a fidelity bond just the cost of doing business. Often it's an add-on to your business owner's policy or CGL. Either way, it's a parachute. I mean, God forbid if you run into trouble, you have an employee embezzlement, you have an external fraud embezzlement, again, make sure your coverage covers those things. It's a way to bring the money back, because when the money leaves the account, there's no choice for the title agency owner but one thing, and that's to put the money back in. Otherwise, you're in big trouble. Internet security should be part of your business liability coverage as well. You have to make sure and look at your business liability coverage, because internet security is an issue, and it's something you need to make sure you've got a little bit of coverage for. And then finally, utilize the bank with more advanced online platform for wires and banking needs. You know, some of our agents are smaller. They don't even do online wires. They're right next door to their local bank, and they just walk down there and do them. It's no big deal. But for some of you guys, you absolutely have to have online wiring capability. So if that's the case, then make sure you're working with a bank that's got the facilities there to handle it, to give you the best chance of preventing it. Because you just, within the last 3 or 4 years, the external wire fraud has been devastating, and it's amazing how effective they are. You know, and I was just going to tell you guys a quick story before I'm done here, but I had a buddy of mine who was over the ATM machine at a local bank, and this goes back to segregation of duties. He was in charge of counting the cash at the end of the day, and he's just a great guy, well respected in the community. And apparently, though, he liked to gamble on baseball and lost a few games. And he's in charge of the ATM. Well, they had 2 people looking over it, but they got tight, times got tight, so they just said, "Jack, you go ahead and take care of it." Well, he started borrowing, in quotes, from the ATM machine. And then of all things, he got married, and he wasn't able to put the money back before he left. So when he went on vacation, they came in and did the next person in line did the audit while he was gone. And they were short every day. And they're like, what the heck's going on? Well, when he came back that Monday, they knew obviously something wasn't right, and they didn't know who did it, though. And the FBI was there to greet everybody when they came into the bank that morning, and they said, well, listen, here's the deal. We know somebody in here took the money. So if you step forward now, we will be lenient on prosecution. And he stepped forward, and I think about the whole town that I'm from about fell over. But anyway, that's just a story. You want to take away the opportunities through the segregation of duties, and certainly make sure you're on top of the risk of online banking. So I think that's all I had, Jeremy. Is there any questions?
Well, I don't see any right now. I'm sure if anyone has any questions for Brent, he can also provide some insight into any of the Sweet 16 basketball games tonight. But I still don't see any coming in. But Brent, thanks for providing the great information on 3-way reconciliation, and how to resolve any issues if there's any shortages, and to make sure no money is being sent to Brent's boat fund.
Or Ferrari fund, either one.
Okay, all right. As a reminder, today's presentation is available for download on ALTA's website at alta.org/title topics. And Brent will also be speaking at next week's Business Strategies Conference in Louisville on a similar topic. He's joining Ralph Toledo of Rhino Live and David Moore of D.W. Moore & Associates, and they will be discussing best methods to protect against escrow losses, and we'll share ways to recognize red flags on preventing fraud and sharing information about proposed changes to mitigate risk to lenders and underwriters. And so we look forward to that discussion next week, Brent. If there's any follow-up questions, Brent's contact information is there. You may also email me at Jeremy, and that's JEREMY @alta.org. And still not seeing any questions. That will bring us to the conclusion of today's webinar. Brent, thanks again for joining us, and I hope all the listeners found the presentation useful.